If you have high credit card balances, you might have considered consolidating that debt. Consolidating credit card debt can be particularly powerful because credit card debt can be notoriously hard to pay off. There are two problems with credit card debt that a consolidation loan solves. First, the minimum payment problem. A credit card's minimum payment is made up of two things: the accrued interest and the principal amount. The principal amount is a percentage of the outstanding balance, and it's not a big percentage. You can linger with the debt for a very, very long time. And that leads to the second problem: the open-ended nature of credit card debt. Credit cards are called revolving credit because you can pay it down and borrow against it repeatedly. Even if you don't have a spending problem, the longer it takes you to pay off the debt, the more likely you'll experience another unexpected expense and have to use your credit card to cover it. Consolidation loans solve both of these problems. Consolidation loans have fixed payment terms that have a definite end date to the debt. It is also a closed form of credit. You can't go back and keep borrowing from it. We've spent years in the lending industry. We track hundreds of lenders and credit cards. With that experience, we'll tell you where to start your search for consolidating your credit card balances. All of the lenders on this list will directly pay off your credit card balances with the proceeds of the loan for you. That's a convenient service, but I like it for another reason. It means that these lenders know that the loan is meant to replace your other debts and not just stack on top of them. They are taking into account that the new loan won't make your debt to income ratio worse. That means that it should be easier to be approved by them. But it also shows that they are attuned to the needs of someone who is consolidating their debt. So here are the best companies to use when you want to consolidate your credit card debt and what we like about them. Best Egg offers loans up to $50,000 and as little as $2,000. They have one of the lowest bottom APRs and will lend to people with credit scores of 620 and better. 50% of the people who take their loans get the proceeds the next day. In addition to unsecured loans, they also offer secured loans, which can lower the APR you pay and increase the loan amount you can qualify for. Best Egg will let you secure your loan with the permanent fixtures of your home. The loan is not secured by your actual home, so you don't risk foreclosure if you have trouble repaying. This is a unique feature. They also offer an APR discount to homeowners. Happy Money has one of the lowest top APRs of any lender on this list. If you are approved, you are guaranteed to get a rate lower than 18%. That's great because consolidating is really only financially wise if you can get an APR that's at least 2 to 3 percentage points lower than the interest rate on your current balances. Happy Money focuses its business on people who are consolidating their credit card balances and are working towards being debt-free. You might be able to get a consolidation loan from your bank or credit union, but many don't offer these types of loans. And the banks and credit unions that do usually only offer it to their existing customers. Citi is one of the few exceptions. They focus on people with good to excellent credit, so they are more restrictive than most on this list. But they don't charge origination fees, late fees, or NSF fees, and they offer an APR discount if you sign up for autopay. Achieve offers several features that would be useful to someone who is trying to get out of debt. In addition to direct debt payoff, they offer a secured version, will lend to people with fair credit, and allow people to add a cosigner to their loan. A cosigner is someone who agrees to pay off the loan if you fail to. If your cosigner has a stronger credit profile than you do, it will significantly improve your application. Achieve also offers debt settlement, so you will want to be very clear about what they are offering you. Debt settlement is very different than debt consolidation. Sofi will lend as much as $100,000. That's the most of any lender on this list. Even if you have substantial debt, a Sofi loan should be able to handle it. Of course, you want to be careful taking out a loan that big. You will almost certainly need a longer loan term, and Sofi offers terms as long as 7 years. If you do take a 7-year term, do what you can to make extra payments in the first year. That will save you a lot of money in interest, and you will pay off the loan much faster. If you need a little support to get approved, Sofi will also allow you to add a cosigner to your loan. Also, Sofi offers several different discounts that can help you lower the interest rate that you pay. LendingClub claims to offer loans to people who have credit scores as low as 600. That's the lowest on this list. So if you have a credit score in the mid or low 600s, LendingClub may be the lender for you. Of course, they will look at more than just your credit score. They will look at your income, your debt to income ratio, your payment history, among other things. LendingClub also offers one of the lowest minimum loan amounts on this list. This is great if your credit card balances haven't gotten out of hand yet, but you still want to take care of them right now. Upgrade offers loans between $1,000 and $50,000. If you need a little help in getting approved, they will accept co-signers and offer a secured version of the loan using the title to your motor vehicle. Normally, I don't recommend trading unsecured debt for secured debt. Having your vehicle seized because you struggled to repay the loan can be a great way to make a bad situation worse. However, if securing the loan gets you the offer you need, it could actually make your financial situation more resilient. Upgrade offers discounts if you sign up for autopay, if you consolidate, and if you secure the loan with your car. When you're looking to consolidate your credit card debt, you want to make sure to shop around. One lender could mysteriously give you a significantly better deal than another. They each have their own algorithms for making credit decisions, so you owe it to yourself to get the best deal that you can. At the Yukon Project, we've tried to make shopping around easy. If you visit our marketplace page, you can select credit card consolidation for the purposes of the loan. You can even filter for the amount that you need and your credit score. When you apply to any one of our featured lenders, we'll check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of the approved offers so you can weigh the offers and determine which one would be best for you. There is one more way you can consolidate your credit card balances. It's called balance transfer. That's where you transfer all of your credit card balances onto a new credit card. At first, it seems like a terrible idea. Aren't you just playing a shell game with your debt? Not necessarily. There are credit cards out there that will give you an introductory period where transferred balances have a 0% interest rate for a period of time. Note, there still will be a balance transfer fee, but that's usually pretty low. If you use that introductory period to pay significantly more than your minimum payment, you can accelerate your effort to get out of debt. During that time, every cent of your payment will go towards the principal. If you are aggressive, you can save a lot of money and accelerate your debt payoff. If you found this information helpful, please like this video and subscribe to our channel. Without your support, we couldn't continue making content like this, and we appreciate it. Thanks for watching.